So, what was I saying to myself earlier? I was saying that I wanted to discuss something before we get started. But anyway, let's get going. Um, Supposedly today's main issue is the interest rate announcement from the Eurozone, from the UK. But these actually are likely to be duds. Okay? Now, why is the ECB announcement going to be a dud? Let's put it this way. Over the last 3 months, December and last February, the ECB initiated its LTROs. Okay? Over the last 3 months, the ECB has printed about €1 trillion of fresh money. This €1 trillion of fresh money is now in the European banking system. And what does that exactly mean for us? It means that in today's ECB meeting, in the press conference later, Mario Draghi would likely say that, hey, since I sat down as ECB president, the ECB has done its part to help in ensuring a recovery for the Eurozone. We have printed money. We have provided liquidity. Last December, we printed enough money to make sure that there will be no problems in this year's refinancing of European debt. Last February, they printed another €500 billion just as an insurance to really make sure that even if there is a default scenario, default situation somewhere, there is still enough money that the European banking system can cope if any default happens. So, in short, in today's meeting, we do not expect anything. In today's press conference, we do not expect anything new coming out of the ECB. Okay, Mario Draghi will likely announce success, will likely announce that they have done their part, and it's now up to the politicians to try to come up with the economic conditions that would, with the economic policies that would ensure a real recovery happens in the Eurozone going forward. Well, Edward, let's put it this way. We have the market already rallying, but this is not about the ECB. This spike up that you see now in your Euro, in your GU, in your Aussie, this is about Greece. Okay? Why? What's going on? Today is the deadline for the for private investors to agree to voluntarily participate in the debt swap agreement for Greece, which means that if you're a private bondholder, if you hold Greek bonds, you go tell the Greek government, okay, we will participate in your debt swap program, and we will take a 70% haircut, and we will take that new debt. We will roll over the money that we lent you before with a 70% haircut. Now, what does this mean? Well, let's put it this way, guys. This deadline is important because the second bailout of Greece, that fresh money that Greece is expecting this month, relies on this debt swap agreement pushing through. Okay? If and the number to watch out for here is 75. Greece needs 75% of its bondholders to agree to this debt swap, to agree to this rollover, to agree to convert. If they fall short of that 75% mark, if not enough people, if the number of people who convert their bonds do not reach 75%, then there's a question on whether Greece will still be able to accept or will be getting that bailout that it is expecting. Now, why are we rallying? We're rallying in Euro, we're rallying across the board because as of last count, at least the last report that I saw, 60% of Greek debt holders have already agreed to participate voluntarily in this debt swap. So they just need another 15% of bondholders to do this. And if they can get that other 15%, then let's just say that the immediate problems for the Eurozone is solved. Okay, the immediate problem is liquidity. The immediate problem is Greece having money. And that will be solved if they get that next 15% committing to agree or committing to this debt swap today. And market is pricing in that, hey, you've had 60 already, then this thing will happen. Greece will get its money, and if Greece is going to get its money, then we don't have to be worried about a default happening. So this again is because of this rally that we have is because of this. Now, again, as I mentioned when we started, forget about the ECB announcement. I know this is supposed to be monitoring for the ECB announcement, but frankly, there will be no rate cuts going forward. The Germans would not want that. Any further rate cut would be deflationary. The problem is ensuring that the banking system has liquidity, and it has liquidity. It's been given the funds by the ECB to the LTROs. So there's no issue as far as the press conference and the interest rate decision is concerned. Interest rate decision is going to be steady. The press conference, Mario Draghi will just say that they have done their part, they have done their job, they've provided liquidity, they've made sure that the system will not collapse even if there's a default. And now, here we are, talking about the debt swap agreement and the likelihood that there will be no default because the numbers are pretty near already. We are going to get to 75. Now, if at the end of the day, I was told that it's going to be from 8 p.m. GMT to 6 a.m. the next day tomorrow. If over that period of time, or even before that time, we have 75% agreeing already, then to us, what would be the next move? To us, that would be a guarantee that we're not likely to get any sudden sell-off, any big decline in our euro. Get to the end of the trading day, get to 8 p.m. GMT, and still have no less than 75%. And that might actually force people to think, you know what, we've rallied so much, we don't have 75% of bondholders agreeing. Maybe the best course of action would be for us to cover our positions. Okay, just ensure that we don't actually, that market doesn't suddenly reverse on us because not enough private sector bondholders are participating. Now, what is the implication again? If not enough private sector bondholders participate, then Greece do not get that automatic guarantee that they will have their money, that they will get their bailout. A solution for the Greek government will be to use collective action clauses, meaning we have majority already of bondholders agreeing to this. It may not be 75, but let us force those who are holding out to participate. That can be done by the Greeks. But what's the problem? If the Greek government is forced to implement this to get the rest to participate, then it triggers or it would really classify Greek as technically in default. Okay, so if Greece goes into that situation where it will be technically in default because it forced the holdouts to participate, then the problem becomes a problem for the European banking system. If Greece forces the hands of the holdouts, then these holdouts can go to the banking system to the banks, to the French banks in particular, and say, hey, you know what? Greece is defaulting. They are forcing us to accept this bond swap. They are forcing us to take a haircut. You should pay us for the insurance that you issued. When we bought Greek debt, you told us we will be safe if we buy a credit default swap from you. And now that they're defaulting, you have to pay us. And guess whose problem that would be? Most of the banks that issued CDS for Greek debt are European banks. So, what am I trying to point out? If we don't get that 75% level, it creates a lot of uncertainty. Either the banking system will have to take a hit, they will have to pay the private bondholders, and that creates precedent, or even worse, there's that likelihood that Greece will not be getting funding from the Troika. In any case, in any of this event, we failed to get 75% of bondholders agreeing by 8 p.m. GMT, then that risks our nice rally today getting reversed again by the market. I look at this and I tell myself we have a relief rally in the currencies right now. Okay? So, that is where we stand at this point. Guys, I know that this is supposed to be ECB meeting monitoring, but again, there's nothing expected out of the ECB. They cannot cut interest rates anymore. They've done back-to-back interest rate cuts when Mario Draghi took over. They are not likely to cut interest rates anymore because that would probably create inflation. The problem is that they need to have some form of transition to get money that is in the bank, in the vaults of the banks, going or flowing into the rest of the economy. That is normally addressed by rate cuts, but again, the concern here is they've done 2 rate cuts already. That is, any further rate cuts would be inflationary. And as far as other measures to be taken are concerned, they've also already printed €1 trillion in fresh money. That more money printing is no longer really likely. Again, what they printed last December is enough to cover the rollovers that the Eurozone needs this year, and they printed an extra $500 billion last February in case there will be any default. So nothing to talk about as far as the meeting is concerned. So that, given that, let us just look at our charts, try to figure out what are we going to do, what will be our strategy going forward. Again, we do not expect to hear anything new from the press conference and from the meeting. Okay, and without anything new, we fall back to technical analysis, we fall back to determining where we are to figure out what to do next. So I hope you folks do not mind. That said, where do I want to go? Let me take a look at our euro. When euro broke lower last Tuesday, I was really gung-ho bearish. I was thinking that with our pushback below 32.91 last Friday, we should be looking for a big bear market. With Tuesday's sell-off, I was thinking, you know what, our objective for the week would really be to get to our key support, your 30.43 region, and yet here we are. We find ourselves with our relief rally. Now, let me just check on some stuff. Our average daily range for euro is about, I'm still waiting for my chart, is about 102 pips. How much of that do we have in euro today? We have our lows at 31.35. Average ranges would suggest that we should be seeing 32.35. We have highs at 32.64. So we have already exceeded average ranges in euro. What does that tell me? It tells me that although we have a bullish market, it may not be a smart idea for me to continue thinking that I will buy this. If I have to buy the euro, if I'm really looking for a test of the key resistance of 32.91, it has to be on a pullback and not on a new high. Okay? Technically, or from the indicators, what are we getting? Well, let me drag some fibs on our sell-off, just to be sure that, just to make sure. Oh, okay. What else do we have? It looks like we also find ourselves just around 38.2 fib retracement of our sell-off from Wednesday last week. So, what am I trying to point out? That we've had a big correction already, that it's a bad idea to initiate new buying positions in your euro. Yes, there are days when the average range can go 250 pips, when the average range can go 300 pips. Or rather, sorry, there are days when the range can go 200 pips to 300 pips. But our average range is only 100, 102. And we've already exceeded that by 30 pips, by 30%. For us to expect another 100 pip move requires news to move the market. And frankly, I cannot think of any news that would be good enough, that would be powerful enough to give us that next spike up. We are just too extended. The ECB announcement likely to be a non-issue. So what can we do? Well, let's review our charts further. We have mixed signals in the dailies. What am I getting from the 4-hour picture? Confluence of buys. Although I have a new 4-hour candle, and this latest 4-hour candle will close in 3 hours and 21 minutes. So there's plenty of time. What looks like a possible shooting star right now could easily change by then. So let us just say that your 4-hour picture is bullish, although you don't seem to have a lot of momentum. Hourly level, what are we getting? You have a confluence of buys as well. At the end of the hour, it looks like I may be getting a shooting star here. Shooting stars are supposed to be bearish reversal patterns. Jano, I don't think so. From what I've read, already 60% of Greek bondholders have already signed on, and they only need another 15%. And once they have that next 15% signing in, participating, then they have their fresh cash. They have their bailout. So we look bullish. 4-hour charts, hourly charts, but because we have average ranges. Oh, that was a new suggestion. Sorry. Well, I don't think that Mario Draghi would say that. But yes, some people would probably want that to happen. So anyway, technically we're bullish, but because we have exceeded average ranges, it is not a good idea to buy from here. If we have to buy, where would a nice place to buy be? Now, it's actually not advisable to do this. You're not supposed to draw fibs when you have an active candle, but I have no other choice. Ideally, I'd like to buy from 50 fib area, 3180. That seems to be a strong or at least a moderate support for me. You have congestion resistances there. It's actually a breakout area. So that's the only place where I would be willing to go and take the buy side in euro. And that is on the proviso that we would eventually get that 15% that we were talking about. That the number of private holders participating in the debt swap agreement will reach 75. Because if it doesn't reach 75%, forget it. If I hear that 25% or if I hear that 30% of bondholders have really agreed that they will hold out, that they will not take this haircut, they will not participate, and they will take their chances in court, I would actually automatically look at shorting your euro if such a news were to happen. Okay? So, we look bullish, we're overbought multiple time frames, but because we have exceeded average ranges, we're even having trouble in staying above 38.2 fib. It is not a good idea to buy from here. If anything, I would actually be more interested in taking the sell side, but I'm not doing that just yet because of the risk that would be coming from Greece going forward. Okay, so no action to be taken. If you want to speculate, maybe look for a pullback. If you want to join the buy side, look for a pullback towards 50 fib retracement. That's about 3180. That would be the place where we can buy. If you're aggressive, you might want to play the notion that we have exceeded average ranges and that people would want to cover their positions ahead of the ECB press conference, ahead of the deadline for this debt swap agreement for Greece. Okay, let me take a look at Aussie for Ashley, and then we'll go to Euro Yen. Let's take a look at Aussie next. Alright, looks like Aussie is around a sell area for me. But let me take a look at the chart. So Aussie has been dragged up by all this relief rally that we've had from Europe. We've pushed up so much today that your daily stochastic has actually crossed higher, and now you have mixed signals. What else? Yeah, the high wave candle from yesterday. Okay, to be exact, this is not a high wave pattern, but almost a high wave pattern. So we have this bounce. The more critical issue for me is this. We are back above the 106.20, 106.24 region. What is so important about that 106.20, 106.24 area? That was your triple top breakout point for Aussie. When this happened last Tuesday, I was thinking Friday we will pick up our Aussie at 103.64. That was how bearish I was when initially we pushed through that 106.24 area. But now we're back above it. So I'm actually in the process of integrating this idea with my view in Aussie. So a mixed view from daily indicators. The fact that you're above 106.24 strongly suggests that if we close the day above this, then we are back inside previous range plays. Then we should just focus on going higher, higher, and higher. Let's not forget that tomorrow is NFP day, and it looks like as far as US NFP is concerned, we've been getting those numbers. We're expecting those numbers to turn out strongly. In fact, let me pull up the calendar. So by the way, guys, you have your ECB decision already, 1% as expected. But let's talk about tomorrow. Again, sorry if you're if you were expecting that we will talk about the ECB. There's nothing to talk about the ECB about right now. Okay. Looks like we don't have all the. Oh, there we go. So what are we expecting tomorrow? Tomorrow you have NFP day. Consensus forecast for NFP is 207,000. We saw an upside surprise in the ADP non-farm employment change numbers yesterday. So what does that tell me? We may get a positive surprise in NFP tomorrow. And even if we don't get a positive surprise, if we just hit 207,000, that tells you that the U.S. recovery story is really well in place. Okay, that it's there and it's likely to stay. Okay, as if the U.S. is able to generate 200,000 jobs a month, then that tells you that you have a recovery that's really starting to gear up. And what does that imply? That implies commodity currencies will or can be expected to strengthen. Okay, so this is important because if we close the day above 106.24 and tomorrow we have as expected or even better than expected NFP, then we give Aussie an excuse to try to rally further. But what can we do today? Mixed signals in the dailies. We have pushed back above a strong resistance level. How do we look intraday? Overbought in 4-hour stochastic, rising in MACD. How do we look from the hourly level? Hourly charts, we have our MACDs rising. Looks like we're coming off overbought territory in stochastic right now. But we've crawled in overbought territory for stochastic. So what am I trying to get at? I'm thinking that we may just see our hourly stochastic oscillate around the 80 level. And what would that mean? You get something like that and that tells you that you have a nice bullish trend. Okay. What else do we know about this chart? Our daily level key support now is 106.24. Our 38.2 fib retracement is slightly below that at 106.13. If I were to join the buy side, where would I want to come in? Ideally, would love to join from just above this area, just above your breakout point here. But I'd be willing to settle for an entry from your 38.2 fib level. So at this point, folks, we appear to be getting a bit of a pullback in Aussie. Remember that our rally in Aussie is part of the relief rally. It is based on the idea that Greece will not be forced to default. What we see or what we're seeing right now could potentially be seen as a technical correction. Okay, people who were long earlier are getting out of the market. But since we managed to push back above 106.24, bias is for the buy side. So we are now looking at Aussie and I'm thinking buy on dips. Okay. Now, if at the end of the trading day, if by 0600, well, you know what, I really heard two time frames. 08 na, or rather 8 p.m. GMT, and someone else told me that it could be extended to 6 a.m. tomorrow. So if by that time we don't have that 75% participation rate, then I would also look at Aussie and I would say expect a pullback. As long as we close the day above 106.24, then tomorrow when we have NFPs, I would look at using that 106.24 region as a potential bounce off point. Remember, NFP or good NFP numbers has a positive impact in your Aussie. Let's take a look at when we last saw NFP coming out. Okay, here's your last NFP day, February 3, and what happened? Better than expected NFP, your Aussie rallied. Okay, so it's actually better to trade good US data in your commodity currency. If the US economy is doing well, then expect that the raw materials, the countries which produce the raw materials needed for buy or that's being bought by the American consumer will benefit even greater than the actual currency itself. Okay, we'll look at Euro Yen. Let me just answer Jano first. Can one say that when China will start to give up its double-digit growth, jobless figures in the US and Europe will go down? You know what? I'm not really sure. But one thing I know is that Levi's is moving its manufacturing production back to Mexico, not to the US. There has been some US firms that's gone back to that's starting to operate manufacturing, that's starting to put up manufacturers again in the US. But what will likely happen is that okay, here's what's happening, guys. Because of the higher cost of oil right now, and the fact that commodities will probably be expensive going forward, China is losing out in its role as a manufacturing floor, but this manufacturing activity is not exactly returning to the US. What happens is people are going to the next best option. Where is the closest country to your market where labor is cheap? And businesses are doing that. They're moving their manufacturing operations to places where labor is not maybe not as cheap as China's, but it's just across the border with a major market. So a viable alternative. Some firms maybe are returning some of their operations back in the US or maybe the UK, but most of them are just moving to a location which is closer, but still slightly less expensive than the home country. India, I don't know. Boss Jess, well, let me just say that I was pissed with that one because I shorted Aussie. I chased Aussie and I actually lost money on that one. Um, yeah. Uh, I can't really recall what explanation the market had for that. Um, I can't remember what particular event or particular news was behind that sudden turn. So I'm sorry, I cannot remember exactly. Oh, Euro Yen, sorry. And then we'll take a look at cable. Oh, you know what? I've been pretty bearish about Euro Yen. Why? Because it's March, it's repatriation season, But here we are, rallying because of the relief rally that we've had. Do I expect Euro Yen to push higher some more? Average range for Euro Yen is 122 pips. We have our low today at, let me see where the low is. We have our low at 106.56. 65, sorry, 106.65. So average ranges suggest that we push all the way up to 107.87. Working rate right now is at 108.19. High for the day at 108.35. So we have exceeded average ranges already. RIVAC or RIVAC, I'm actually a Filipino. So we've exceeded average ranges. Where do we find ourselves at the moment? We find ourselves just under a resistance level. And we have this nice target, major resistance area, 108.74. Yeah, you notice my accent. Wait, so what do we have, guys? We've had a big rally, but we've exceeded average ranges. We found ourselves bouncing off the EMA lines. We have an attractive target at 108.74. But again, what's the main issue? This relief rally was driven by the Greek story. That Greek story is old. You know, we've been riding that issue for the last couple of hours. We have exceeded average ranges. Unless someone tells me that the count for participation is now at 70 or maybe 69 or 71, I don't think that another big surge up would be likely. So, what am I supposed to do? Mixed signals in the daily picture. 4-hour level already overbought. Strong resistance at the 108.74. Hourly level also overbought. Moderate resistance at 108.35. So strong resistance 108.74, moderate resistance at 108.75. Doesn't look like it's such a good idea to be joining the buy side in Euro Yen. Maybe on a pullback, and again on the proviso that the Greek situation will end up happily for everyone. That 75% of private bondholders would take that haircut and would roll over, would agree to a debt swap. If this were to happen, then I would look for an attempt to take out 108.74 tomorrow, not today. If I were to buy this, I would say let's look for a bounce from at least the 38.2 fib area. Do I suggest selling? If I can confirm that after, how many hours has it been since the open of the European market? European market has been open for about 4 hours. If I can, 5 hours. If I can confirm that after all this time, the number of participants to the debt swap is still stuck at 60, then perhaps I may dare look for a bear market. I may dare look for a short. 77. All right. Well, if the unofficial number is now 77, I guess it's a non-issue already. If it's at 77, what does that mean? I won't be looking for any pullback at all. I just need an official confirmation for that later. And what does that mean for us? No, 75% participation is enough to prevent a trigger of the CDS. Oh, guys, looks like we've run out of time. Sorry. Uh, thanks for joining. If you want, you can join me in FXI. I'll be there in an hour. Thanks for joining, folks.